Mike Santoli joins us now to detangle last week's disorder. And the underlying question is, Mike, can growth stocks start to work again?
Yeah, that is a tremendous question, Julia. And actually, the fact that we're asking that question when the overall S&P 500 remains just slightly below its all-time high is amazing. If you think back to last summer, it was assumed that the mega-cap growth stocks had to work for the overall market to work. We've seen this massive rotation, though, into cyclicals. If you look at a one-year chart of the NASDAQ 100 exchange-traded fund against the high beta, which is very much a proxy for cyclical stocks, the first 6 months, March to September 1st of last year, was all growth stocks. Since then, growth stocks have basically flattened out, and it's all been cyclicals. It seems right now maybe we're getting to a point as the bond market has calmed down a bit and yields have stopped flying that maybe it's going to be a little more of a mixed picture, a give and take, that we don't necessarily have to bet all on value and cyclicals or all on growth stocks. One upshot, though, is quality stocks such as mega cap growth have become less expensive. So they were very overvalued. Things like Facebook and Google and Microsoft have lost like several PE points in the last few months just by their stocks doing not much of anything. That's one thing to keep in mind. Another one is dividend growth strategies. This is like the dividend aristocrats might come into the more focus as people start to get a little more nervous about their bond holdings and look for income that can grow along with inflation in the economy as opposed to just getting static nominal yields. So I think all those things are in the mix right now as we try to figure out if this is a new regime in terms of where yields have gone and, of course, what the reopening and how much it's been priced in, guys.
All right, Mike, the data that we're going to get, that we have already gotten so far this morning, ISM manufacturing, best since 2004. Prices paid, best since 2008. Is the market going to get myopic on that?
In terms of the inflation picture, I think that we're going to continue to talk about it. We're going to continue to argue about whether it's just really a statistical phase that we're in as we lap last year's weakness. But I think it's also going to, concentrate the debate about the Federal Reserve. The Federal Reserve is very explicit, does not want to move, is going to err on the side of staying easy. If the data and the new stimulus come in and the economy really starts to ramp ahead of schedule, quote, so to speak, in terms of the Fed, then I do think, yes, we're going to start focusing on that, although I still think we're in a phase where inflation is sort of more of a net positive. It's more of a getting back to normal factor as opposed to an immediate threat to valuations.
Shepard Smith here. Thanks for watching CNBC on YouTube.